We met yesterday as the Monetary Policy Committee of the bank, and the decision of the committee was to leave the repo rate unchanged at 6.75%. As we have explained before, this level of interest, we believe, is conducive to support domestic economic conditions, but also at the same time protecting the link between the Namibia dollar and the South African rand. So let me give you a quick summary, as usual, a quick summary of the developments globally and at home that have contributed to this decision, or that explain this decision of the Monetary Policy Committee. If you look at the global level, the picture that we shared with you in December, those who were here, it's more or less the same. But the good news is that the global environment is improving. Global economy is now forecast to have grown by 3.7 in 2017. When you were here in December, we said the global economy, according to the IMF October forecast, was expected to grow at 3.6. It has now moved a notch up to 3.7 in 2017, and that is on the account of both advanced countries as well as emerging and developing countries. All these countries are actually improving. Among the top performers in the advanced countries, the US is one of them, Japan is one of them, and also the Euro area. These are the countries that are performing better in advanced countries. But as I said again, the emerging and developing countries are also improving, notably countries such as Russia, Brazil. As we have said before, we have now seen them registering or recording positive growth rates as compared to declines in economic activities in those economies in the past. If you look at a country like Brazil, it has actually been shrinking. The economy has been shrinking over the past 3 years or so. So we have now seen a recovery starting. Of course, this is supporting other countries such as China and India that have already been performing well, registering positive numbers in the region of 6.7% for all these years. So at home here in the region, we are also seeing a positive picture developing, although it's still early days. If we look at our biggest neighbors, Angola and South Africa, we see an improvement there, albeit still small, in economic activities. We have seen positive growth rates in South Africa. We have also seen positive growth rates in Angola. But as I said, these are still early days. We expect this momentum to continue, and we hope this momentum to continue improving in our neighbors. As you know, that if your neighbor is performing well, you will also benefit from that positive development in your neighboring country. So we all hope and pray that this momentum that we are seeing in our neighboring country will continue to gather more force as we go along. We have also seen sectors such as transport and communication slowing down in terms of growth, and that has pulled down economic activities in Namibia. But there are also, top performers in the economy that have improved and that have shown positive growth rates, as we have indicated before. Sectors such as mining, sectors such as agriculture have done well in 2017, and we hope that you are all going to pray so that we can get more rain this year, so that agriculture will continue to contribute positively to economic growth. Apart from those two, tourism also continues to record positive growth rates, and these sectors are performing better than the rest of the sectors in the economy, and we hope that going forward, 2018 is going to be better. Our view is that we will start to see a recovery in 2018, although it's not going to be that significant, but it will be a beginning of a positive development in 2018. So we'll at least see some some expansion in the economy. But it means we still have to work hard. As I said, the global and the regional environment is improving. We need to take advantage of this situation. We see prices for most of our commodities, prices of copper, price of gold, price of zinc, improving significantly. And this augurs well for the economy because it means more revenue for Namibia. It means we will get more foreign exchange. And therefore, we need to take advantage of this and work hard and to support the sectors that we have identified as strategic sectors for Namibia. If you look at our national development plans, we have identified those sectors that we believe can propel Namibia to a higher growth level. Sectors such as agriculture, we must continue to invest in those sectors. Sectors such as tourism, we must make sure that we welcome our tourists. We must be friendly when the tourists come. We must make sure that we maintain all our infrastructure, roads that lead to our tourist attractions, Etosha, Sources Lake, Canyon, all those, where the tourists go. We must make sure that those roads are safe and properly maintained so that our tourists feel safe. Because with this, we can attract more tourists, and they will continue to talk about Namibia as a tourist destination. We also need to continue marketing Namibia as a tourist destination so that we can get more tourists and create more employment and support economic activities. Again, with infrastructure, I talked about roads. Rail is also very important because we have identified Namibia as a logistic hub for the region, and therefore we must continue to invest in those infrastructure. This, I believe, with the benign external environment improving, we should be able to see the economy getting better, improving, creating employment so that we can have shared prosperity for all Namibians. That's on the domestic and the global front. There are, of course, still risks on the horizon, things that we still need to continue to watch at the global level. We have seen some uneasiness in the financial markets, especially for the last few days or so. We also concerned about higher debt levels in some of the key economies. This could topple and reverse the momentum that we are seeing at the moment going forward. At home, of course, as I said before, we need more rain. We need rain. If we get rain, our agriculture is going to perform better. When we come to inflation, again, the picture has not changed much. The decline that we have seen in inflation throughout 2017 is continuing. If we look at the average for 2017, stood at 6.2 versus 6.7 in the previous year, 2016. So we can see the trend is downward, which is a good development. So if you look at the inflation rate for the last 3 months of 2017, again remaining stable at around 5.2%. And looking ahead for 2018, we expect inflation to average around that same level. The growth in domestic credit continues to slow down. Again, if you look at the numbers, if you look at the numbers for 2017 for the whole year, the average was 6.6%. Compared to 11.4. You can see a significant slowdown in the growth. It's still rising, it's still growing, but it's growing with a small speed. It's now running at 5% kilometers per hour, if you like, versus running at 11.4 kilometers per hour. So you can see the speed is still moving, but the speed is a bit slower. And this is on account of both domestic businesses as well as individuals, households. Both sectors are slowing down their uptake in credit. If you look at the last few months of the year, particularly December, we have seen a continuation of that trend, with installment credit or private sector credit now standing at 5.1 versus, and that's now December, versus 5.2 in October. So you can see this trend is continuing. When you look at the external environment, our balance of payment, the in and outflow of foreign currency, that environment has improved in 2017 on account of lower imports. We have been preaching about spending less money on non-productive imports. It looks like the economy is responding. We have now seen the import bill coming down in 2017 by about 10 billion or so, which is a good development. Of course, we want to see more of that, only by the things that we need, because if we continue to export money outside, we also export employment outside. So this is a good development. As a result, the difference between exports and import has come down significantly. But it's still huge. It's still huge. It's still standing in the region of about 20 billion or so per year. Per year, you have a gap of 20 billion that you need to fund, or that you need to close up. And you can only close that up by producing more things that you can sell outside and reducing the things that you buy outside. I think it's hard time if we do all the things that we have talked about in terms of our national development plans, our prosperity plan, Harare prosperity plan. We should be able to improve the productive capacity of this economy and be able to produce things that we consume here, but also things that we can sell to others, so that we can close this gap between imports and exports. As I said, the gap is still there. It has come down significantly, but still in the region of about 20 billion a year. So because of this improvement in the external sector, the balance of payment, our reserves continue to be healthy, standing at about 30 billion or so, and in terms of month of imports, in the region of about 4.7 months of import. So this is healthy, but as I have cautioned before, part of this money is the money that we have borrowed from outside as a country, and therefore is not things that we have earned through exports. And therefore, the healthy way of building up your reserves is to reduce what you spend outside and increase your sales outside, so that you can get more money that is coming from outside, and have healthy foreign exchange levels. Because without foreign exchange, you will not be able to buy anything from outside. Not even this cell phone that we have here, you cannot buy it from outside. So it's important to conserve foreign exchange. With that, those are the developments that explain the decision of the Monetary Policy Committee. Thank you for your kind attention. I believe we are going to have a good discussion.
My question is bordering on the political happenings that are unfolding in South Africa. We saw the rand gaining considerably with the rise of Ramaphosa, and now there seems to be a political limbo in South Africa as the NEC is trying to remove Jacob Zuma from the presidency, and it seems to be lingering on. And yesterday we saw the rand surrendering on its gains because of this political impasse. Is it not of concern for you, since we are so intricately connected with South African economy? Thank you.
I'd like to know, the Minister of Finance has on several occasions mentioned that some of the austerity measures that we've taken since the start of the economic decline in the country have hurt our growth. Do you think perhaps there are some measures we could have done without, and some that we could have implemented to ensure that as much as we try to maintain our economic stability, we save while at the same time also bolstering growth?
Let's start with the developments with our neighbor South Africa, or developments in South Africa. Unfortunately, I'm not trained in political science. I will not be able to untangle what is happening there. But I think what is important to say is that we need a stable South Africa. We need a stable neighbor. As I said before, if your neighbor is performing, or the economy of your neighbor is performing, you will also benefit from that. And therefore, what is important is business confidence. We have seen business confidence in South Africa improving. We want that to continue. And if that continues, we also see a currency which is going to remain stable. So we will again hope for a solution to be found that is going to improve business confidence so that we can get the economy to be stable, the economy to grow in South Africa, so that they can create employment there, and hopefully to see some tourists coming from South Africa to come and spend money in this economy. The austerity measures, well, I guess Mr. Ofiku, it will be good to have a conversation with the Minister of Finance, but we are on record saying that we support consolidation because growth has to be authentic. Growth has to be authentic in the sense that we need to spend money on things that are going to help us to have sustainable economic growth. One of the things that we are worried about in this country is the wage bill. And as you know that we have been spending a lot of money on the public wage. The public wage in Namibia, or public sector wage, it's one of the highest in the world, in fact. It's, as you know, the SACU countries have a higher public wage in general. SACU in general has got a higher public wage, but Namibia even tops SACU. So if you look at the public wages as a percentage, GDP is in the region of about 16.3%. Other countries generally are in the region of 9%, 10%. So if you can compare where we are, that is concerning. And therefore, we need to redirect our spending in a way that is going to support growth. And as I said, that we have identified economic sectors that we need to support that will unlock private sector investment, because government alone cannot create employment and cannot create growth. You need the private sector to grow. And the sectors that we have identified, those are the sectors that we believe there are potential, there's money to be made, and that money is not going to be made by government, it's going to be made by the private sector. So government's role is to ensure that the environment is conducive. I talked about roads before. Make sure that the road to sources flay is maintained so that you can get more private investment there. You can get more lodges being established there. And this, people who are in this business can continue to attract investments. That way you create growth. That way you create investments. But spending money on consumption, unfortunately, although you will see the economy growing in the short while, is not sustainable. So that's not something that we support, and therefore we support what the minister has been doing in terms of consolidating. And I think that needs to continue to redirect our spending from a high wage bill to a wage bill which is sustainable. And we believe if we come together, all of us Namibians, those who are in the government leadership, those who are in the union leadership, I believe we can find an amicable solution which is going to sustain or yield results that are going to help us to have sustainable public wage or a sustainable public wage, but at the same time not hurting government employees, because I think one will have to look at both. I believe if we sit around the table, we should be able to find that solution. But we definitely support the redirection of spending.
From a central bank's point of view, what is the ideal level for the wage bill? We've heard of some tightening measures that were announced by the Prime Minister's office. I'd like to know how involved is the central bank in this process of managing and bringing down the wage bill, if at all?
We have seen this heightened demonstration of political will as far as consolidation is concerned, seeing the president banning outbound flights and also the OPM coming in to pronounce itself on certain areas where cutbacks needs to be made. But we have elephants in the room, and rightly you have talked about redirection of expenditure as far as wage bill is concerned. But we also have military spending, the bailing out of state-owned enterprises. Do you think that this political will towards consolidation would be enough to make as much savings as possible if we do not address these other things? And my second question is also to find out from you whether the Angolans have made any action towards committing to the repayment plan. Thank you.
I want to find out what the current trade deficit is.
I believe every country will have to assess its situation and see what is the right level of the public wage, because countries are not the same in size. Some are bigger, densely populated. So you can't just say Mauritius is spending 6% of its GDP on its employees or public service, and therefore Namibia should spend 6. So one will have to assess, the uniqueness of that country, and decide what is the right level. Maybe what is important to say is that over the past 5 years, the wage bill has increased significantly. It rose from about 13%, 13% to about 16%, 16.3%. That was significant in 5 years. We used to hover around that level, 12%. So as I said, the others are hovering on about 9%, 10%, and maybe that's more or less the right level where we need to be. Unfortunately, you can't go there within a day. It's going to be a journey, and it's a journey that you have to start. And I believe as a country, we have started that journey. The fact that the minister said they want to consolidate the measures that the Prime Minister is undertaking to try and contain, the growth in the size of the public service, freezing certain positions, that is a step in the right direction, and we should continue to travel on that journey so that we arrive at where we used to be before in 5 years' time. As I said, it has taken us 5 years to accumulate this level, or up to this level. So it's going to take us maybe another 5 years to get back to where we used to be. What's the role of the central bank? Unfortunately, we don't have much role to play there. You know our mandate. Our mandate is of course to advise where we need to do to advise government, and we continue to do that. That the right level of public wage is probably not where we are now, but we need to slow down. It's something that we will continue to say, and it's something that we have said before. So, and I believe the policymakers in Namibia have taken note of that. Hence, actions that we see being taken, being at the presidency, being at the Prime Minister's level, being at the Ministry of Finance level. I believe we are all on the same page. I believe even our unions are also on the same page, because when you listen to to their statements, they are also worried. And as I said, if we all sit around the same table, we should be able to agree on a path that is going to lead us to sustainability. Is that enough? Only wage bill? Probably no. As I said, we need to scrutinize each and every spending that we undertake to see where can we save. If we are spending a lot of money in a particular sector and we can achieve efficiency, so be it. Let's achieve those efficiencies so that we can redirect spending to areas which are going to give us economic sustainability, that is going to help us to create employment, that is going to help us to fight poverty. I think that should be the priorities. And we know these priorities, and I think it's just a question of now, enhancing our actions to be able to put money where we need to put money so that we can support growth. And that should be genuine growth. As I said, consumption-led growth is not sustainable. I think Shame's question on the deficit, I think I believe the Minister of Finance, when he tabled his midterm review in October last year, he gave out some figures. I'm now also answering your question. In terms of that projection, the budget deficit for 2017-18 was estimated to be in the region of 5.3% of GDP. So that's the figure that we have. We are waiting to see the minister's revised numbers as he tables his budget in the coming few weeks. We believe the budget will be tabled in the coming few weeks, and therefore, if that number is revised, we will see that in the revised budget statements that the minister will table in Parliament. soon. Did I answer all the questions? I believe so. Oh, he likes the Angolan part. I believe we have shared this information before, that yes, Angola, or the Central Bank of Angola, continues to make good on its obligation. They continue to pay. As we have reported, I believe we have shared this information with the media, that the latest payment was in December, because these are quarterly payments. So the next one will be in March. So we don't expect any difficulties in that regard. And the last one will be in June.